Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Happy Friday. We have a few takeaways from today. Now, the equity market had some solid footing early on. The S&P failed at our first key resistance level, right around 27.97, 27.98. We talked about it in the Morning Express. Ultimately, the fact it could not get out above 2,800, and this is what we were telling clients that called our trade desk, is look at that resistance level, and if there is conviction, and if the buyers have that conviction and take this thing out above 2,800, then there's room to run. But if the buyers do not have that conviction, and then this thing fails at first key resistance, the market is going to remain vulnerable heading into next week. And that is exactly what happened. Now we're back below the 200-day moving average, went to a low of 27.67, that's first key support. And actually, we are back to retesting that 200-day, 27.77, 27.82 is our big area. It's a pivot there. You want to watch this level on a closing basis. If it closes below 27.77 and back below that 200-day moving average again today, then again, that's a further reason to think this market's vulnerable heading into next week. So stay vigilant. Where today finishes is very important. But if we do make a new low, look for selling to accelerate into the end of the day. Now moving on to crude oil, it did hold major three-star support at 68.56 yesterday with the low of 68.53. The market is recovering back in today, but overall, you're starting to see some of the enthusiasm early on, that risk-on sentiment. You're seeing it in the currencies as well. The Aussie dollar, the Canadian are both lower from where they were earlier, and even still, the dollar index is lower. So you're seeing a little bit of that risk-on sentiment start to dissipate, and really you're seeing crude oil not be able to get out above 70 bucks. Now there's some resistance kind of all the way up there, but really you want to see this thing back above about 70.5 to neutralize this week's weakness. So right now, crude oil does remain vulnerable. However, dips are buying opportunities. What we're looking for in crude oil, ultimately, it's hard to pick where the floor is because this is an overcrowded trade. And when the market starts to move lower, you start to see panic selling, and that's what takes it further. But when it does find its footing, we think we're heading into a bullish time of year, and you're going to see crude oil much higher than this by the end of the year. Give us a call. We're here to talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. You check our website for updates, and you can sign up for a free trial for research there. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thank you.